Let's discuss about global banking trends, that is open banking, central bank digital currency, and embedded finance. Evolution of banking. So first phase is the traditional phase where we have manual branches and processes, and any task that we need to do would be in person. Then comes the second phase, which is digital, wherein banks have created their apps and we can do the transactions or maybe check the account balances through internet banking and online services. And then comes the third phase, that is the platform, wherein banks have created up the APIs so that the third party fintech companies could access the data through the APIs and can offer us various personalized services. And we have also have fintech partnership in this phase. Open banking. Open banking enables secure sharing of financial data via APIs, allowing third party apps to access transactions, account balances, and spending patterns. And one of the rules that have been applied to the open banking is that the customer consent is mandatory. No data is shared without explicit user authorization, ensuring privacy and control remain with the account holder. Let's understand by an example. Let's suppose user logs in into the finance budgeting app. User need to provide the bank and their login IDs so that the third party app can access the data and help the customer in their budgeting. So bank will ask for authorization. Once customer give the access to authorize their data, then the data would be shared to the third party fintech apps and they will help us in providing personalized finance budgeting services. Let's take another example of lending apps, which offers instant loans without collateral. So, open banking in general will benefit the banks, fintech companies, and customers. So, it will benefit the banks as they can monetize their APIs and fintech partnership to expand revenue streams. It will benefit the fintech companies as they will be able to build the product faster using existing financial data infrastructure. And it will benefit the customers as they will receive hyper personalized services tailored to real spending behavior. As there are various benefits for open banking, they have challenges as well. The challenges are legacy integration, regulatory complexity, cybersecurity threats, and data privacy risk, which meaning that the sensitive financial data exposed to the third party application uh, can cause the loss of funds as well. Uh, let's go through another major concept, that is central bank digital currency. So, digital currency issued by the central bank is called the CBDC and it carries the same value as the physical currency. It is backed by government. So globally, so the examples are digital rupee backed by Reserve Bank of India or digital euro backed by European Central Bank. Difference between the bank deposits or the deposit that we uh, do in the commercial banks such as HSBC or Citibank versus the CBDC is that the CBDC is backed by the central government, whereas the funds kept in the bank is backed by the commercial banks such as Citi or HSBC. So how we can take up the CBDC is basically these CBDC are given to some of the commercial banks. So we need to go to the commercial banks and we need to say that we need central bank digital currency. So um, then probably we need to add some funds in that, and there are various benefits for that. So l- let's take an example. So we are doing the retail payments through CBDC, not through the normal bank deposits. So how we can do this is basically the customer or the user will scan the QR and sends payment request. So instead of commercial bank validating it, central bank will validate it. So central bank system will authenticate and approves instantly. And then the funds would be transferred from the CBDC of that user to the to the retail merchant. Let's take one more example of CBDC cross-border payments. So if we have a bank deposit and we do a cross-border payments using Swift, it will probably take 2 to 3 days with high transaction fees and multiple intermediary banks involved. If we do the payments using CBDC, then the direct central bank to central bank transfer settlements in seconds at lower cost. Some of the risks in CBDC is that the banks will lose deposit as customer migrate funds to CBDC wallets. So that is an um, that is some of the that is the loss to the bank. Privacy concerns for user is government visibility into all transaction raises civil civil liberty questions. And another disadvantage is the infrastructure cost, high investment required to build and maintain CBDC system at scale. So another major concept is embedded finance. So financial services integrated into non-financial platforms. Or in short, what we can say is users don't go to banks, banking comes to users. So whether we use a shopping platform such as Amazon, or we use a riding application such as Uber or Ola, or a booking platform such as Book My Show to book our tickets. So these are non-financial platforms, but um, but banking could be integrated into those platforms, which make the whole experience seamless. Let's take an example of a e-commerce. If a customer wants to buy a phone on Amazon, so the process, if the customer wants to buy a phone on Amazon with instant credit, so the customer can select no cost EMI through the APIs, credit check would be done and the loan would be issued. This would benefit the platform as well as the lender. So platform meaning the e-commerce would be benefited as they would be increase in the sales conversion through frictionless checkout. It will benefit the lender or the services, the financial or the banking services as new revenue stream with instant API driven loan origination. One more example. Let's take an example of a ride application such as Uber. So for the driver, there would be instant payouts. There could be micro loans and insurance could be provided to the driver instantly. How these financial services can be used to generate income. So first is commission on loans. Platform will take up a cut on every buy now, pay later services that they offer. Payment processing fees. They could charge a payment processing fees to the users. Insurance partnerships. revenue sharing with insurers for policies sold through embedded channels. Let's compare the three major services that we have discussed: open banking, central bank digital currency, and embedded finance. So, core function is data sharing, digital currency for CBDC, and service integration for embedded finance. The customer will be benefited by better insights in open banking, faster payments in CBDC, and seamless experience in embedded finance. So, example could be the third party fintech app will check income and spending history via API to assess affordability. Buy now, pay later loan offered and approved instantly within the shopping platform. That could be an example of embedded finance, and payments settled instantly via digital rupee or digital euro. That would be an example of CBDC. And the entire system could be like all these services can be seen as integrated with this example.